Goku, I'm sorry. I didn't even know you had powers like that, man. Chill. Damn. Hey guys, welcome back to the After Hours. I'm the A-Tel Beast, and today we're gonna talk about halts inside of the market. So this week, we saw lots of low floats. Most of them came from Chinese stocks, but the ones that we really want to talk about today are the IPOs. Now, when we talk about IPOs, we understand they happen with SPACs, special purpose acquisition companies. If you want to know more about that, look at this video up there. But when it comes to the SPACs this week, they're a little special. Now, what makes them special? They were hit with a T12 halt. Now, what is a halt? And when does it happen? Who does it? Halts happen for many different reasons. Halts is a pause inside of trading activity. When you are hit with a halt, all trading stops. No one can trade inside of a halt. Now, when you have an IPO, a new stock that just hit the market, people don't know how to evaluate it. So it goes through a very rough period where sometimes it just goes up for no reason other than just being the new guy on the block. When it comes to these IPOs, especially the SPACs, the special purpose acquisition companies, they have parent companies. These parent companies, they create this third entity. It's a blank check company. It's empty. It's a shell company. Now with this blank entity, it becomes the merge asset for the parent companies. Now this merged asset, it has a specific job, and that's to complete the merging deal or the buyout. Now, when there's an acquisition, which is a fancy word for buyout, the shell company has a different purpose. But ultimately, things run smoothly. The parents, they agree to the engagement, and then later, you have the merged entity, it trades by itself. Now this week we have MEOA. MEOA, it is having a merger deal with DTGI. Now DGTI, it's a digital company. There's nothing really special about MEOA, but what you need to know is it went up from $10 up to $40. Now there's something suspicious going on because MEOA is having a merger with DTGI, who's trading on the OTC market. And usually you'll see the little guy inside of the merger is the one that sees a big increase in price. But in this case, you see MEOA have the large increase in price. The people that really thought it was suspicious is the SEC. Now the SEC, they're the cops of the market. Nobody wants the cops in their business. And when you get hit with a T12, that's when you know the cops are really interested into you because the NASDAQ is supposed to be the cleanest neighborhood. It's supposed to be the most strict. Now, another reason the SEC may have stopped this low float SPAC from getting out of control is because recently we've seen low float Chinese stocks going out of control. They have to target somebody. It's becoming very popular to just jump on any parabolic, whether it's on the front side going up or on the back side going down. If enough T12s happen, a lot of people will stop putting their money on the riskiest of assets and chasing anything that hits a big number too fast. So this might be some large scare tactic. The way I like to see it, the SEC is the police officer that's going up to the cat and stuck in a tree, and it's asking questions. It's saying, how did you get up there in the tree, young Padawan? Can you come down? And then if you refuse to come down, take it down. What happens next? You don't want to know. It's for your protection. SEC approved. You've seen T2 halts where it's pending news, and the pending news needs a few minutes before it catches up and everyone can respond to it because the public information is available to everyone at the same time where it's fair. But when it comes to T6 halts or T7 halts, the volatility halts, those are there to slow down the pace of speculation. And usually when there's a halt inside of the market, it creates doubt. It builds hype. The longer the halt is, the more people have a chance to think. And that's not always a good thing. Now, the most extreme case is a T12 halt. So when there's an unexplained run, NASDAQ likes to answer questions. And so they ask those questions to the company and say, why is your stock going up? What's the deal that's been promoted that made that go up? What do speculators see that we're not seeing right now? And can we get a hand in it? At the end of the day, T12 is when they choose a stock and put it in timeout. Now, when you get put in timeout by the SEC, timeout can be as little as 2 days to as long as 5 years. There's no actual bad stuff attached to it. It's just when you're part of the NASDAQ, it's a very strict place. As long as you're above $1, they'll let you stay. But once you start going from $1 to $50 within a few seconds or a few minutes, things get suspicious. There's suspicion of mass manipulation, maybe even fraud. Now, when that happens, they hit you with the T12. Now, the ending that usually happens when you get hit with the T12 leads to a delisting from NASDAQ. Now, when you get delisted, that means you can't play fair with everyone else. You have to know that there's a lot of concerns. Some of the concerns are, where is it gonna open? What time? What price? Well, the short answer is anytime, any price. Aren't you lucky? If it is determined that the company's committing manipulation or fraud, or it's gonna be delisted soon, do you get your money? That's a case-by-case basis. But for the most part, you should be okay. Now, when it comes to the feelings that people have around this, that's always gonna be neither here nor there. But when it comes to the feeling of the shareholders inside of the Halts, what do they think? Now, shareholders, they're investors. They're looking for strong fundamentals or black swan investments. They're looking for something that can fly, like it did. When this gets delisted from NASDAQ, it goes to another exchange, usually the OTC market, where it trades for pennies. Now, at the OTC market, that's where you're used to seeing volatile tickers that can't meet the normal requirements that the regulators like the SEC requires for you to trade on NASDAQ. Now, the scariest part about all this is this can happen to any stock at any moment. It doesn't matter whether it's in the after hours, intraday, or pre-market. When it comes to halting a stock, all it takes is a reason. And the SEC, they decide when to drop the hammer. And when they do, they make sure to drop it hard enough so everyone knows. They're going to use that stock as an example of why you should use risk management. If you're stuck inside of a T12 halt and you went in way more money than you thought you should, you're going to learn. And so is everyone else from your example. For example, if you are buying a stock and you bought it low, it went up to 100, or the speculator said that this is likely to go to the moon, and then it was hit with a T12 halt. The hype is going to build up. People are going to expect it to keep going up. But if it opens up after a long period of time, the foundation of that run is going to disappear. People are going to get distracted. They have the attention span of a gnat. But at the end of the day, you'll learn your lesson. And the lesson is to only put in money that you're willing to risk into the market. Now, if you happen to be short on the top or near the top of that parabolic, and then it opens up one day, like really low, you think maybe this is the greatest opportunity ever, and I just threw a bunch of money on there, and you're expecting a lot of returns. Nah, it's not that easy, because each night that you hold overnight, you have to pay for the borrow fees for holding that position overnight. So if the run inside of that unidentified parabolic had high fees, you're gonna have to pay the fees times 4 or times 3, sometimes times 5 every night that stock is halted. Even if there's no actual trading there, your broker is gonna hold you accountable because anything that happens in your account is your fault. So I would trade parabolics that have low fees just in case it gets hit with a T12 halt. People view these T12s as disasters or opportunities. Now, the opportunity part of this is if you're on the right side. Now, the right side is not guaranteed either way, but in my experience, I've seen that the long ones usually lose the foundation of why the spike is up there. The hype disappears when the fear settles in. But if you get hit with a T12 and then you become free within a very short period of time, it usually means that you have friends in high places. And then people, including the investors, they see that as your resilience in terms of being a stock. Either someone is on your side or you're actually an honest business. I don't think it's the latter. For example, on March 20th, there was ISO, which is Isoplexis. Now, Isoplexis merged with Berkeley Lights, BLI. When they merged together, iOS and BLI, they created CELL, which is Finamex. Now, before this merger happened, ISO was paused for 2 days and it opened at midnight. No one's trading at midnight, but that's just one of the unique cases where it happens very shortly. In a longer case, you can still see things that have been paused for over 5 years now, still waiting to be opened or forgotten about. So that's just one of the early cases. When we talk about ISO combining with BLI, that one, it's just 2 days. Now those 2 days actually just built the hype up, and now it went from negative news to positive news because it happened so quickly. But if you let the people fester on the side of the negative loops and feedback, the doubt will set in and the foundation of the hype will disappear. And then most likely the stock is going to plummet. And that's really common inside a T12 because we usually see a T12 on side of a pump and dump or inside of a huge short squeeze. Usually after the fact, when it reopens, the SEC announces that they're going after the CEO, or they give the evidence that they found, or usually it gets put in a category where it's just indefinitely suspended, pretty much bankrupt at that point. Now the most targeted is usually pending mergers or buyouts. Now at the end of the day, no one knows what's going on, but we may figure it out soon. But this does give us an idea of how T12 halts is going to affect the market. All right guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.